Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Wednesday, June 29th. Firstly to the S&P 500, and very strong buying in this market today. The buyers have followed through very strongly, gapping up at the open, forming a window here and forming a very large white body candle, very similar type of candle to the one that we saw for the previous day's trading, except for a very small shadow on the top. This suggests there has been very strong upside momentum, and the buyers have closed with control and they've shown very strong commitment. Importantly, the market has broken out through the top of the Ichimoku cloud and closed above there in a bullish manner, suggesting possibility of there being continued follow through for the next day's trading. We've also seen the market take out both the Kijun-sen and the Tenkan-sen. And this gives us a bullish market in all three timeframes, which is also supported by the Chikou span, so suggesting there is good solid momentum behind this move. We are, however, trading within this zone, this highlighted yellow zone of previous support and resistance once again, so we do need to watch the top of it. 2079 is an area that has held up previously, but in the recent past, the buyers were able to trade up through there and test up to the 2100 round number. Normally when we see the market break out through the cloud and in a bullish manner here above the top of the cloud, we like to see a strong follow through to confirm, and this is no different. And also I would like to see the market close in a bullish manner above 2079 to confirm. Now just looking at the pattern that was formed here, this is an island cluster reversal. They do tend to be strong reversals. So here we have the downtrend in place, the gap to the downside, couple of candles and a gap to the upside, and it's an island because it's like a river flowing here, and here's the island out here with the river in between the shore here. With this being a good couple of bullish candles too, it also does suggest that the buyers certainly have returned with a vengeance and with quite some strength. So there is a very good opportunity here to see that strong follow through. Now, just looking at the bands here, and the bands do put it in perspective. We are still in a downtrend in that medium-term time frame in terms of the bands, and but the market was looking very overextended when we were trading down here, and we've snapped back to equilibrium very quickly. Now trading within the band, suggesting that that strong negative tone in the market is no longer there, and an opportunity here for the market to trade back towards that middle band where we could see some resistance coming in 2082, which is very close to the top of that highlighted zone on the Ichimoku chart, say around 2079. So expecting to find some resistance around this 2079 to 2082 level. If we do close above 2082 in a strong bullish manner, we could end up trading all the way up to the top of the bands at 2111. Moving next to the NASDAQ 100, and a very similar type of trading activity here. A very large gap up at the open. The market trading through the Tenkan-sen at the open, suggesting that there certainly was a very strong rush of enthusiasm from the buyers. And at the end of the trading day, closing up through the Kijun-sen, also trading through the 43.47 level of previous support and resistance. Not quite making it through the cloud here. We are still down below the cloud, suggesting there still is some negativity in that longer term time frame, but we will be looking for the market to trade up through there if possible. The build of momentum here has been strong as well. With this gap up, it's quite a big gap and may provide some resistance to this market. Just a few things that we do need to watch here for the next few days trading, and very strong resistance overhead for the NASDAQ 100. Firstly, we are trading within this zone of previous support and resistance that extends up to about 4402. Also, just above here we have a previous strong resistance level, 43.95. We also have the Ichimoku cloud, which extends up to a previous support and resistance area about 44.21. And we also have this window, this large window that was formed as the market gapped down when we saw that very strong selling over the last previous few days. This may provide an area of resistance, so we do need to watch this area all the way up to about this 44.21 region, but very, very strong resistance overhead, and the buyers are going to have to be very, very solid to break out through all of this resistance over the next few days. To the sectors, utility sector, which is something of a safe haven, continues to trend up and is up above the upper band, so the chart is suggesting some strength. But formation of an indecisive candle does suggest potential for a change of trend. But if we look at relative strength here, relative strength has just ticked over, suggesting that we aren't seeing the flow of capital into the utility sector as we saw previously with as an alternative safe haven equities play. The momentum of that relative strength has started to move down as well, so suggesting that the strong outperformance of the utility sector versus the overall market is no longer there. And also the consumer staples sector, XLP, is the code for the ETF. And even though we see some positivity on the chart with the buyers closing with control and showing some strong commitment, we've seen with the relative strength against the overall market that the relative strength is coming off, as is its momentum. So we're not seeing the flow of capital here as a safe haven. So even though the raw chart here is telling us that that the chart is looking good, we are seeing capital flow in a greater proportion in the equity space into sectors other than the utility sector and the consumer staple sector, and it does suggest that traders are feeling quite comfortable with this current uptrend that the overall equities market is in at the moment.